This is episode 245 of Zen and the Art of Real Estate Investing with my guest, Patrick Grimes. Patrick is the founder of Passive Investing Mastery and Invest on Main Street. He started investing in single-family rentals in 2007. Then, in Invest on Main Street, built a portfolio of thousands of apartment units across the southeastern U.S. and Texas. He then created Passive Investing Mastery to educate investors in the art of alternative investing strategies and to sponsor best-in-class investments. Patrick, welcome to the show.
I love this show. Love the idea of putting Zen and real estate in the same sentence. My wife comes from a Buddhist background, so maybe in our household we try and strive for the combination of those two things.
Yeah, well, I appreciate that. And investing can be stressful. I think people are looking now for ways to make it less stressful, which is part of passive investing. But still, on the way up the scale, it's a lot of figuring it out to get to this Zen level. I think I was fortunate that my dad was, showing me properties at 2 years old that helped me get there. But what about you? When was the first time that you were interested in real estate?
Well, so when I was just a snot-nosed engineer, I was doing automation and robotics, machine design right out of college, and started making some money looking where to invest it. I was assuming it was going to be in a startup because we worked,
Yeah.
out of Silicon Valley, and it's a lot of high-tech medical device, aerospace, automotive, all kinds of stuff.
Yeah.
But the owner of the company I worked for said that he made all his money in high tech and dumped it in real estate, and his only regret was not putting more into real estate sooner.
Yeah.
And I was like, holy crap, how's that? I figured I figured he made all his wealth, playing the stock market and startups, but that turned out not to be the case.
Was when you first got into it, were you thinking, hey, I can get better at the numbers, or were you just following what, the boss of your company said, like, let's just dunk some money in real estate?
Well, a combination of the two, the analysis paralysis of engineers is a very real thing.
Yeah.
And the desire to want to underwrite for safety margins and safety factors that make
Very, very safe.
never move forward in life. But the interesting thing is I followed the leadership of my mentors and some other people into some investments, which back then, 2006, 7, and 8, the real estate market was never going to go down, and everything was daisies and dandelions, and
Yeah.
and I was less risk averse. I saw risk, but I was also, confident and young, and I wanted to double and triple my money. I wasn't so interested in some of these, single digit or low teens returns.
Yeah.
So I got involved in a pre-development. I did a lot of due diligence. I looked at several different developments that this outfit that I was working with had done, and they had outperformed in every single one. And I was like, wow, this is the way, I'm gonna do this, and I'm gonna, churn and burn for a few years, and I'll be set. Didn't happen.
Yeah. What was the holdup? Was it the development process? Or did they, fudge their numbers, or was there something that you might have found out? Because yeah, of course, I expect you to do like the most rigorous. No one would have even done that due diligence, like checking on prior deals. They're just taking, oh, good, they sound cool. Let me put some money in.
Between the markets and their track record, I thought it was a shoo-in. But then 2009 and 10 happened, the subprime mortgage collapse. And so everything fell upside down. I paid for a couple of years on land, and I realized it just got worse and worse and bleaker and bleaker. My note got bought and sold a bunch of times, and I was personally guaranteed and a bit scared as a young guy. I finally found an attorney who said, look, man, you just got to stop paying. They're never going to talk to you until you stop. I'm like, are you serious? Like this is, and he helped me get in contact with the lender. They basically said the same thing. They said, so you're not even underperforming. Why are you're still, why are you calling us? But at the end of the day, there was no way out. I was determined not to go bankrupt, but I was able to negotiate to the point where they did debt forgiveness and had a foreclosure. And as a result, I had to pay, which I wasn't even aware of at the time. I had to pay debt forgiveness, which showed up in terms of the debt forgiveness to me, showed up as a 1099 income for me through the IRS. So it was pretty brutal.
Yeah.
And I wasn't wealthy at all. Right? They were just lending to snot-nosed engineers back then at high leverage and letting. So Yeah, I was pretty battered and bruised, but still a really talented engineer. I got a master's in engineering after that, and I got an MBA, and I made my way up the ladder, got a bigger, you know, more important job at a smaller pond, and started pulling bonuses in before I started getting back and realizing the game is really about long-term wealth accumulation and not the get rich quick, be the tortoise with the hare. And then I started learning a lot about recession-resilient markets and buying assets, not liabilities, things that cash flow.
Yeah.
Read the Purple Book and all that, and started investing from California in Houston, where it literally leveled off in '09 and '10 before it started going up. Right now, we have a litigation finance, which is a diversified litigation portfolio.
Yeah, that's interesting. Let's
Mhm.
talk about that one because that's it. I mean, it's not something that I've heard before. I've heard, of course, debt portfolios that come out, a lot of things like that, but this is something different. So tell us what it is and what the investment looks like.
Well, it's pretty cool, sister, because we do have an acquisitions fund buying commercial real estate at the
Yeah.
best time to buy. We have a debt fund lending to real estate operators when it's really tough to lend.
Yeah.
Uh, but in the same kind of asset-backed lending approach, we have a lending finance company that lends to attorneys. And it's just an asset-backed lending strategy. The reason why it's so compelling is that if you're going to target, okay, say you're in real estate and you're in stock market, maybe you're in oil and gas. If you're going to target your next investment, it's probably shouldn't be, and that's all you got. It probably shouldn't be real estate. Probably should be something completely different. Then where you go? Well, my favorite ones are healthcare or legal services
Yeah.
or CPAs or plumbers or HVAC. Why? Because those are completely non-correlated to the broader markets, to the rest of my portfolio, meaning that the fundamentals behind those, they don't shift up and down. They just simply doesn't care. The legal industry simply doesn't care
Yeah.
what's
Yeah.
going on with gold, interest rates, S&P. It's not an opinion. You go back, you look at the data, right, on attorneys, not only their billable hourly rates, their collections, all of it. It's just, and we put all this in the deck. So you got to choose like an industry or two or three industries. Like, man, not only has this shown resilience, but it has completely non-correlated, non-attached, completely different fundamentals than the rest of my
Yeah.
portfolio. And you can see how you're going to access that. Well, in order to invest somewhere and get a return, you got to provide a service to that industry. And so in real estate, we're either providing a service to real estate operators to buy properties
Yeah.
with, or to improve properties. That's our debt fund in real estate, right? It's either acquisitions, debt acquisitions, or CapEx to improve.
Yeah.
And litigate and attorneys, there just so happens to be, it's a very simple industry. There's attorneys, there's court fees, filing fees, and hourly rates. And it's expensive. Oftentimes, the harmed individual, the person that needs representation, they can't afford it.
Yeah. Right. Right.
A huge market of those individuals that have really good cases that were wronged. And there's an industry of contingency fee-based attorneys. These are not attorneys that are doing pro bono for free.
Right.
They're saying, look, I believe in your case. I will go at this. I will defend you for a split of the fees that come out, a split of the settlement, and this contingency fee, right? And so you get 60, I get 40, for example. And that's what the
Right. But
attorney
they need to get all the experts in something from somewhere.
So yeah, they're gonna have to float their own staff, right? They're gonna have to pay the court fees and filing fees. They're gonna have to go through the couple years of litigation process. And so the challenge with attorneys have is even if they have a shoe-in exit, like some of these late stage startups, attorneys can't get partners because there's ethics issues. They
Yeah.
can't have somebody come in and meddle with the attorney-client relationship. I tell a lot of people like the choice between being active and passive is part of our mission really is not only to provide education so you achieve mastery in the art of alternative investing,
Yeah.
but it really comes down to building security, right? Not just independence financially, but security across lots of foundational pillars. But the second part of the mission is so that you can contribute to the causes you care about most, right?
Yeah.
And some people that's their family, some people that's their hobbies, and some people that's philanthropic stuff. And we've done mastery series things on that. And that's really, you get to that scarcity, abundance, security, right? Where you've got not just abundance, but teetering on a market cycle, but security. Then you really get to the fact, like, what am I going to do with today? I don't have to worry about, so much. Let me do something cool today. And I think throughout my life, I've sacrificed things. I've sacrificed, family. I've sacrificed hobbies, right? And I think, and I've sacrificed my ability to get to a point where I have the abundance to give back. And so I think all of us find ourselves in that balance, and hopefully I'll have a positive impact on some people at this point.